Well, U.S. President Joe Biden went on the offensive against Republicans on Wednesday, saying they are playing politics with the national debt. In remarks to union workers in Lanham, Maryland, Biden charged the GOP with hypocrisy for favoring tax policies that could push the accumulated $31.4 trillion US national debt higher while refusing to agree to raise the debt ceiling. Republicans have argued that federal spending is too high and they will not agree to raising the debt ceiling unless spending is cut. But Biden said while the GOP demands cuts in federal spending, it is looking to extend Trump-era tax cuts that were signed into law in 2019 and set to expire in 2025. The White House says Republicans would increase the debt by $2.7 trillion US by prolonging those tax cuts, in addition to cutting a corporate minimum tax established by Biden and other policies that would add to the debt.
The House are talking about taking the economy hostage over the full faith and credit of the United States. They say, unless I accept their economic plans, and which is totally irresponsible, they're not going to pay the national debt, which took 200 years to accumulate. It's not the debt this year, last year. We cut the debt by $1.7 billion in the last 2 years. This is a 200-year obligation that's been accumulated. And I made it clear in the State of the Union, I will not negotiate whether or not we pay our debt. I will not allow this nation to default.
Well, after a weak holiday shopping season, consumer spending in the U.S. has now rebounded in January as consumers boosted their spending at stores and restaurants at the fastest pace in nearly 2 years. Retail sales in the U.S. jumped 3% in January after having sunk the previous 2 months. It was the largest one-month increase since March 2021, but excluding the pandemic era, January's retail sales surge was the largest in more than 2 decades. Driving the gain was a jump in auto sales along with healthy spending at restaurants, electronics stores, and furniture outlets. Wednesday's robust retail sales figures, along with a strong January job report, suggest that the U.S. economy remains durable, perhaps even strengthening, and at little risk of succumbing to a recession anytime soon. Earlier this week, economists at Goldman Sachs reduced the likelihood of a recession this year from 35% to just 25%. However, the combination of solid spending and hiring will also likely raise pressure on the Federal Reserve to raise its benchmark interest rates even further. The Fed has already signaled that it expects to carry out 2 more quarter-point or 25 basis point hikes to a range of 5 to 5.25%, which will be the highest level in 15 years.